Hello everyone. Well, the dollar has been pretty stable against the other G10 currencies over the last 24 hours. The DXY index is nearly unchanged. The only currencies showing major changes were Inoki, which rocketed midday yesterday after the higher than expected Norwegian CPI, and the yen, which has weakened as oil prices fell back and stock markets around the world rebounded. Swiss franc was also a little bit weaker against both the dollar and the euro as the risk of war in the Middle East has receded. The drama over Syria is dominating markets as President Obama asked Congress to delay a vote on attacking Syria while he pursues the Russian proposal for international monitors to destroy Syria's arsenal of chemical weapons. That diminishes the need, or the perceived need, for safe haven currencies. Otherwise, the G10 currencies are really little changed from when I spoke yesterday. Now, with the Syrian issue on hold while negotiations continue, the market's attention is likely to turn to next week's FOMC meeting. Market participants are talking about a Wall Street Journal piece that noted that the 7 Fed governors, in other words, those who work for the Federal Reserve Board, not the regional Fed presidents, haven't made any public speeches or delivered any prepared remarks since July 18th. By the time Chairman Bernanke gives his press conference following next week's meeting, it will have been the longest such stretch since at least 1996, when records began. Their silence could indicate uncertainty about what the decision will be at the meeting, but many investors are beginning to think that they're tacitly confirming the many hints that we've gotten from other FOMC members, such as San Francisco Fed President Williams on Monday, that tapering will indeed begin this month. In that case, I believe the dollar is in for a rebound soon. Given its resilience so far, I'd expect the dollar-yen would be the biggest beneficiary of such a move. There could also be some profit-taking in the New Zealand, the Kiwi dollar, which has recovered somewhat recently. The Kiwi may also be weakened by the RBNZ meeting overnight, as I'll discuss in a minute. Now for today, the focus of attention is going to be on the UK August labour report. That's taken on critical importance for the pound after the Bank of England said they won't consider changing interest rates until the unemployment rate has come down to 7%. The ILO unemployment rate for July is expected to remain unchanged at 7.8%, which could disappoint to some people who were looking for the UK economy to recover faster than the Bank of England expects, and it would therefore be negative for the pound. Then overnight, as I mentioned, the Reserve Bank of New Zealand will make its interest rate decision. Economists unanimously forecast that it'll keep the official rate on hold at 2.5%, so the focus of attention is going to be on the statement and the press conference afterwards. Now, after his statement following the last meeting in June, Governor Wheeler said the RBNZ expect to keep rates unchanged, quote, through the end of the year, unquote. The market focus will be to see whether he extends that pledge following the recent move to rein in mortgage lending through quantitative restrictions on lending instead of just affecting the price. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.